Guys, great to see you both. Paul, you're really in tune right now to this push and pull between some of the good work that's gotten done in fighting inflation, but the unwillingness or inability of the Fed to let the good times get out of control, so to speak.
Yeah, I think the Fed's walking a pretty thin line here, but I think they're doing it very well. I thought Chair Powell's speech last week at Brookings was absolutely fabulous. He was more transparent than he's ever been before, I think, in this cycle. And they're in the restrictive neighborhood. He pounded the table. They're there. Real rates are up and positive across the entire curve. You're seeing goods inflation roll over. The housing bubble is popping. So essentially, they're trying to find the right street in the restrictive neighborhood going forward, which I think undergirds the probability of a soft landing. So I would associate myself with the soft landing camp as a feasible and likely outcome, not a remote outcome.
Interesting. Lisa, you're a little cautious on equities, at least in the new year. Does that mean you're not quite on board with that scenario Paul describes?
We are cautious, to your point, and really, if we look at what's going on both from a top-down basis as well as corporate earnings, we do see, even though there have been some positive surprises in the data, that definitely the economy is still on a downward trend. And we do have risk, as Paul just pointed out, with the Fed being in restrictive territory. And they've acknowledged themselves it's very hard to calibrate exactly how to maneuver to get to that soft landing. So in our view, whether it's an outright recession or maybe even a growth recession where you have maybe close to flat or only slightly positive growth, that could still be a very difficult headwind for U.S. equities, again, as those growth rates continue to come down.
Paul, what do you make of that? What's happened to earnings estimates and even some of the macro desks call for maybe a weaker down stock market next year. How much vulnerability does the real economy have, given what the Fed's already done?
I think the economy is going to be soft, and I agree with the notion we could have a growth recession, which is also known as a soft landing. And on the earnings side of things, I think that we've already taken the growth stocks out back and shot them. They've had a nice bounce recently, but we've gotten reality back into that sector. And I think the industrial sector will be fine. So I don't want us to pound the table and get wrapped around the axle about earnings. The stock market is in fair valuation, and it could go into a trading range, particularly after this big bounce over the last month. But it is not time to be a big bear on stocks. That was a year ago.